Yeah, 1 second, huh? Yes? No, so Warren is not joining for the interview today. Ah, that's a shame. Okay, he did send me an email with his 9 investment recommendations. Great. Just tell him next time I see him for a cherry coke and cheeseburger in his office. As you just heard, sadly today Warren Buffett is not about to join us for the interview, which I really hope he would. But I do understand he's a busy man with his 91 years of age. Most of you are probably already very familiar with Warren Buffett, one of the richest men in the world and considered one of the greatest investors of all time. He really is a living legend, and with 91 years old, he's still very much at it every day. He's what many consider a true value investor. And in the last few years, he's really been beaten down for that because everybody invested in growth stocks, cryptocurrencies, NFTs, all these things that he was never very fond of and actually really pulled out of, because he really is known to invest in things that he understands, commodities, day-to-day items that people need and that have a great but slow upside over time. That's how he built his wealth, through compound interest. And it's interesting actually when we go over to Yahoo Finance. So I pulled up over here Berkshire Hathaway. So that's actually his main holding company that you can invest in yourself. It's listed on the stock market. Then I compared it to the S&P 500, which is this line over here. Then there's ARK Invest Innovation from Cathie Wood, who has been extremely celebrated in the last few years for very aggressively investing into growth and innovation stocks. And then there's just an individual company, PayPal, I picked over here. PayPal, out of all of them, it dropped by 35% since 2 years, so that's quite a massive correction. ARK Invest from Cathie Wood actually dropped by 20%. The S&P 500 actually returned 30% within 2 years. But then we look at Berkshire Hathaway, led by Warren Buffett and Charlie Munger. It returned a staggering 44%. So it really did the best out of all of them. And that's why in recent times, value investing has really made a comeback. And that's why today I want to share with you 9 pieces of advice that Warren Buffett shared himself personally with me to become a better investor. Point number 1, never use borrowed money to buy stocks. Now, I really agree with him there, because too many people often want to ride a wave and they borrow money from the banks because they want to bet on the future and the price going up, so they want to take even more leverage to have greater gains in the future. And that's all great when markets go up, but every so often there is a massive correction. Even with the amazing results that Berkshire has managed to achieve over the years, in 4 separate occasions they actually dropped by more than 37% in a matter of days. So imagine if he would have used margin and a big leverage to invest into stocks, he might have been wiped out back then, because you will get margin calls. As the markets go down, the banks will start calling you and they will need more cash injection to service this margin. He's always been very deliberate and careful of what money he's using to invest, and I think it's a good recommendation for all of us, especially for long-term investing. Don't invest money that you can't afford to lose. Point number 2, embrace the virtue of a sloth. He's very much a proponent of inaction, because he says too many people overreact. They react to what the markets are doing. They react to emotion. They react to temporary changes or quarterly drops in a company earnings. And too often people make short-term decisions that impact the long-term profitability of a company. So he is very much a believer of leaning back and letting things unfold and having a macro view rather than a micro view, and look at the long-term opportunities and business development of a particular company and stock, rather than overjudging a critical tweet that came out or a newspaper article that was bad towards the company. Look at the long-term potential of the company you invest in and stick with it. Point number 3, America is not in decline, it's only becoming more and more efficient. Warren said in one of his most recent company letters, never bet against America. And yes, while it is true they're going through difficult times, no question, unemployment, inflation, so many factors, but in the long term, US has always come up with innovation and pushing agenda forward, especially in terms of market dynamics and efficiency. They've always been cutting edge. And yes, while China is a real threat to Americans' dominance, even if they overtake them in the future, US definitely is not going to disappear, and now they're really investing into AI, chip manufacturing, cryptocurrencies, all these leading fields. They're going to be cutting edge. You look at the long-term macroeconomics of the country, and he's very bullish on this, and that's why most of investments continue to be in the US. And that's why I personally also continue to focus mostly in the US, because by design, most of those companies thriving in the US are naturally also operating in a global economy, and as such are quite diversified. Point number 4, invest in companies that are unsexy but build products that people actually need. He's very famous for investing in commodities such as Wrigley's, the gum manufacturer, or Coca-Cola. And it was funny, in one of the interviews he was asked, why do you invest in Wrigley's and not in the startup companies? And then he responded, well, I don't actually know which of the startups are going to succeed, and I don't really understand too much of the internet, but I do know one thing: whatever website they're going to be on or what metaverse they're going to be in, I do know that most likely they're going to be either drinking a Coca-Cola or they're going to be chewing a gum at some stage during the day. And And that's pretty true. These industries really haven't been disrupted over the years. And that's why he likes investing in them. He understands them. And these are commodities that people need for their daily living. They're not very sexy. They're not the ones that are talked about online. No YouTuber or influencer on TikTok or Instagram is going to hype you into buying Coca-Cola. But if you look at the long-term price appreciation and dividends they've been paying, it was one of his most successful investments. Point number 5, don't invest in businesses that are too complex to understand. Warren Buffett, for example, never really was a big fan of tech stocks, growth stocks, let alone cryptocurrencies, because he just couldn't wrap his head around it. And I really appreciate his honesty, because he doesn't want to invest into something he doesn't understand. Now, personally, I think he's so smart, he probably understands way more than most of us, but still he doesn't really feel comfortable to really make a substantial investment into such asset classes. And I think that's a great reminder for us to also not blindly follow because somebody said to buy a particular NFT or crypto, so it's gonna go up and we trust them. So many times we've seen rug pulls happening, people don't understanding what they're investing and losing all their money. So it's a great reminder, invest into things that you understand, can explain actually to a 10-year-old, because then it means you really understand it. Funnily enough though, even though he always says he doesn't invest into tech stocks, in 2016 he invested 1 billion in Apple, and that actually turned out to be his very best investment he's ever made. So sometimes things can take time, and it's important to take your time to understand rather than just YOLOing into a particular stock or crypto. Point number 6, and that's probably his most famous quote, and that is, be fearful when people are greedy and be greedy when people are fearful. At the run-up to the financial crisis in 2007-2008, Warren Buffett was staying very much put and not investing too much. But then in 2008, when the market was tanking, he went heavy investing into distressed companies such as Goldman Sachs, Bank of America, and by 2013 he turned it into a 10 billion profit. So when most people were fearful, he really went for it. At the same time in 2020 and 21, when everybody was plowing into the stock market, he was staying put and sitting on billions of cash reserves, waiting for the next crisis to come and make his move. Advice number 7, and that is, one second, I think he's calling me. Yes, Warren, you have a bonus tip. They should do what? Gently tap the like button and subscribe to the channel, and their investments will have similar returns like yours? That's amazing advice, Warren. You are the smartest man. Thank you for that. Well, you heard the man. Point number 8, ignore short-term moves in stock prices. That goes back to his point of being a long-term investor, because in the short term, things are fluctuating so much that if you wake up and start checking the prices, you're gonna feel so bad because things are going up and down, and the bigger your portfolio is, a 20% swing can be several hundreds of thousands of euros or dollars that are lost, but they're not really lost because it's a paper loss. They're only lost until you materialize them. And that goes back to him being a long-term investor. So even though in the short term they do fluctuate, in the long term, that's where he sees the money-making opportunities. So don't check the prices every hour or so unless you're a day trader. But if you're a long-term investor in dollar cost average every single month, price movements on a daily basis don't really matter much. It's exciting YouTube content, yes, but other than that, it really doesn't matter in a macro point of view. Point number 9, buy stocks as an owner, not as a speculator. I love that saying because it's so important. So many people just invest because some analyst said they should buy their stock, or some random guy on the internet said you should buy into this crypto or stock. But an investment should really be an investment that you would make as an owner into a company. Imagine you actually own a part of the company. What are you excited about? Which company brings you joy? Which companies are you using yourself? The more you invest in the companies, the more you're going to do research, learn about them, grow with them over time. You don't want to invest into something just because it brings you financial returns, but also because you share the vision of the company. That's why, for example, I love investing into Apple or Starbucks, things that I use myself on a daily basis. So whenever I go to their shops or buy something online, I feel like I'm contributing to the company, and I thoroughly enjoy the products myself. So I can see how in the long term they will do well. And here's a little bonus one because I just love it so much, and that is, make sure you're happy. Yes, Warren Buffett, as I said, is already over 91 years old, and being one of the richest men in the world, he really doesn't need to work that hard anymore. But he does it because he loves it. He was quoted saying the following: I can't buy time, I can't buy love, but I can do anything else with money. And why do I get up every day and jump out of bed with excitement? It's because I love what I do and I love the people I do it with. And I think that's so important. Investing is as much about building wealth as it is doing something you love. If you don't enjoy the entire process, you're not going to be a good investor. You're going to be spending hours of research, looking at numbers, studying the markets. If that doesn't bring you joy, you're not going to do well over time. And that's what he does exactly. And that's why with over 90 years old, he's still so passionate about what he does. And I really love that. So yes, you may criticize him for not investing in Bitcoins or other growth stocks, but judging by his current and historic performance, he really remains one of the greatest investors of all time. And if you want to follow his advice and invest into S&P 500, which he always advocates, or any other ETF for that matter, then check out the video over here where I'm going to run you through the process of finding the right ETF that fits for your investing style. Let me know in the comments what is your favorite advice from him, and don't forget to gently tap the like button and subscribe to the channel. Stay healthy, get wealthy, and I'll see you in the next one. Ciao.